All right, obviously there has been a major development over the weekend, and we need to factor that into any decision making here early in the week. To nutshell my opinion on what to do, what not to do, I would say let things settle, okay? Don't get too jumpy here at market open on Monday with such a active situation. Things are still developing, and this is a pretty major geopolitical situation. And also, I say this all the time, but don't speak in absolutes. I would say nobody knows what is to come, but the one thing we can trust, another thing I say all the time, is price action, okay? Allow things to happen and then confirm is the most probabilistic way to approach this week, I would say, and frankly, anytime in the markets, right? Let things happen, let them confirm, initiate some risk, right? When you have the ground rules. So it doesn't really change my macro analysis, things in levels that we've been talking about here for a while, right? We closed the week midpoint of the balance. How many times have I said that in like months? I feel like it's just, we're not really going anywhere in the market, and it does feel a little bit toppy, but I'm not going to be silly enough to say the top is in, short the world. It's just, we have not even technically just yet, we have not lost the daily, certainly haven't lost the weekly trend, and we're nowhere near the monthly trend, right? And that is how topping cycles work, right? You lose the daily, the weekly, the monthly, things get nasty, and typically we pull back to prior cycle highs. So a lot of things have to happen for that to happen. So again, don't get too jumpy Monday, 9:30 at the open, say I'm going to short or I'm going to go long, no matter what the price action or where the market's open today, guys. I would just encourage you to maybe take the day off, okay? I'm going to give some things to look at as opposed to ideas here, because I'm not likely to enter any new risk. I did take a short on Friday that we will cover here. It's something I was discussing to have been looking at for a while now. I did initiate that on Friday. We'll see how things look. I probably will be decently into profits on that. But I want to feel things out. Do I want to let it ride or just go ahead and take profits, reassess? So, as we've been talking about, for me, losing the daily, coming back up, retesting the area, failing and rolling, okay, I would initiate some market shorts at that level. Also look into some individual sectors and names. But when I say market shorts, I'm talking about SPY puts. And then, from there, we look to see, do we lose the weekly, take some profits off, ideally take profits on those initial shorts, and then pop back up, retest the level again. Maybe if we fail, then we would be reinitiating at that level. Then we'd come back into the monthly. I would expect to bounce a tweet, something, right? Pop us back up. Do we fail again? That could be sort of our 3 levels of shorting the market. Not anything new for you guys. So also, I want to talk about, again, anything I say in this section is purely fantasy. It's opinion. It's not even so much opinion. It's, y'all know I like to build scenarios, right? And trade if this and that. But I have to have 2 scenarios. You just saw my bearish scenario. Okay, so what's the other, right? We always need to play devil's advocate here and have 2 scenarios at least. So a bullish scenario to me could look like maybe the market has this priced in. I would say that's certainly possible. The U.S. military buildup in the region has been going on for weeks, and you have to assume the market expected something with that sort of buildup in the region, right? It's pretty much a good chunk of the U.S. naval fleet has been in the region, right? And we saw this coming, right? It was certainly on the radar of the market. So maybe we could argue that the initial strike was priced in, maybe, right? So the bullish scenario would be a scenario where things begin to settle very quickly. Like, what if the initial strike is all that is done? Some of the rhetoric coming out suggests that there is still more attacks or bombing to come. So I don't know if that's the case, but best case scenario, I guess, in the world that we're currently in, would be that the initial strikes accomplish the goals of the people involved, and we back off and allow Iran to take it from here. Okay, like that would possibly be a good scenario. And also the Strait of Hormuz not being closed, right? That's a big risk, a fifth of the world's oil coming to a halt, right? Like obviously everyone knows the implications of that. As far as I'm seeing, that's not a factor right now. So that kind of weighs in, right? Like I think that's the main risk or threat there, was that it becomes a prolonged or a boots on the ground situation and the strait be closed. Okay, so that would have major implications. If those things don't happen, then maybe we get the clarity, the uncertainty is removed from the situation, and the market reacts well to that. So if that were to happen, as far as futures go right now, it does look like we're going to gap down, possibly even below this range. But, we'll see, right? How does the market react to that? Does it sell off? I would say don't get too aggressive in that sell-off. Again, wait for the confirmation. I'll pull a chart up here in a second that you guys have seen from me before. But anyways, is it looked at as an opportunity? Do they step in and buy it up, right? In that case, just start looking at the 50. If we get back above the 50, then we could consider initiating some controlled risk to the upside. But the real move here would be breaking out, confirming above. Again, nothing new that you guys have been hearing that from me for a while. So to pull up that visual that I was talking about here, look, a lot of people expect, gosh, man, the misinformation, the expertise that showed up initially on the strike, and just so many calls. That's what stop speaking in absolutes. We don't know from Saturday morning to today, things have changed, right? It's an evolving situation. But I just encourage you again, don't say that the world has to explode over this and we're going to zero, because historically wars are bullish for markets. It's just a fact, right? So I've got a chart here that shows major conflicts since 1991, the Gulf War, and these dotted lines is what I would pay a bit more attention to. It's the average 3 days, 3 weeks, 3 months later, we're higher. Okay, so just factor that into your bias if you would like to have it. But I would, again, don't have a bias, right? Especially political. We're talking about pocketbooks here, right? Not a political opinions. We're talking about making our money make money, and you need to remain open. You need to just build scenarios, wait for the move, and then the confirmation, and then deploy risk aligned with probabilities, right? What usually happens when X happens? We'll have an X and a Y, and you are the Z. Okay, so I said in the Saturday session that, it's an evolving situation. We were hours after this whole thing really hitting the wire, so I was like, look, check out the watch list on Monday for my updated thoughts. And some things that do roll over is watch these swing lows on SPY, RSP, IWM, and the Qs, right? We haven't broken structure on many of those things. I would say the Qs is a little worrisome. Financials is worrisome, but the main indexes that we like to monitor, we've got swing lows, okay? As long as we're above them, then chill out on the short idea, okay? So we've got about 200 for the RSP. We've got about, call it 255 on IWM. 593 here on the Qs, and 675 area on the SPY. So just some levels you want to be watching there. Of course, financials has begun to roll over, right? Or I said this in Friday's watch list, right? As it looked like, hey, are we going to invalidate this breakdown of, major support here? We broke it, so it became a shake and go, is what I was saying. Watch out for this to be a shake and go. It's something we see happen all the time. The people that short the breakdown, they roll them, okay, breakout, fake out, shake out, pulls back, does not break structure, and starts to reinitiate through the area. Okay, so I said to watch out for that, guys, and that's not for me to toot any horns. It's just repetitive trading within probabilities, waiting for confirmation. It's all it is, guys. I encourage you to do so. All right, and just real quick before I get into any of the sector thoughts, I'll show you the short that I initiated here on ARC. And same idea here. It's something I've been watching to break down through this neckline. It broke down, came back up into the range, but really didn't change the narrative here, right? So making a lower high below the 200 and the 50, we started to trigger that on Friday, so I took the short. 1/8 size I'm willing to add. We'll see. There wasn't a war when I took this position. So look, we'll see. This is, according to the overnight market's going to open up, well into profits. So yeah, we'll see how I feel about this. Ideally, I would like it to break down, okay, and come back up. Maybe I'll take a few off if it does that. But anyways, come back up and retest and fail the area again, allowing me to size up into the position. But I have to pivot, or at least be in the moment with the new situation we find ourselves in. Looking at crypto here, a little bit of a breakdown off of the initial news that has recovered, and we're still holding this, but what we're holding is a bear flag, guys. So I wouldn't say get too aggressive here on this just yet, but keep an eye on it. If we can break out of this range and start to change character, confirm and build above, start making higher highs, higher lows after changing character, that would be something to keep an eye on. And then as far as the ETFs go, I would just say, pay attention to energy, pay attention to materials, resources, Pay attention to aerospace and defense, of course, right? So just have those on your radar. If you want any of my watch list for any of those things I just mentioned, just ask. I'll drop them in your comment. All I have to do is hit copy link and drop them into your comment. I have watch lists for all the things, and they're leaders within the sector. Okay, so they're good watch list things to be monitoring if we can get some breakouts and follow throughs in those sectors. But again, I'm not going to get too aggressive Monday. Let's let things shake out and confirm one way or the other, or maybe we just come right back up in the midpoint of the range and there's just nothing to do. All right, but don't get too crazy shorting this out of the blocks here Monday at 9:30. So last thing I want to touch on is I had some people, the tomtool, my investing tool that I built for you guys. I have a video where I explain it deeper on the channel. Go look at it. The title is something around the world of investing, making investing easy, because I do view, as arrogant as that sounds, I don't love the way it comes off of my tongue, but investing is easy. It is what it is. Just because maybe we don't want to hear it doesn't make it untrue. The reason I find it to be easy is because I've learned to be patient, and what I do is wait for a weekly RSI 30 trigger on the best companies in the world, and I use that to DCA in. So I have a tool that I built right here to help you visualize that, and you can go sign up for this. It's completely free, and it's all explained here on what to do in the tool again, or just go watch that video. I don't see a need to re-explain it here right now, but this is a fantastic way of visualizing. Had you gotten into Tom triggers on RSI weekly 30 triggers on the leaders, when they trigger throughout, so like we'll just pick the SPY here, right, and do since 2001. Had you been buying Tom triggers with annual contributions, as you should be doing to an investing account, just like an IRA, you should be adding to your investment accounts, and you should have capital ready to deploy and opportunistic moments, right? We shouldn't be buying at the top, wait for dips in the market. They do come. It's a healthy part of uptrends, and then deploy, right? So this just gives you a way of visualizing what it would have looked like had you done so, okay? So yeah, go play with this tool. It's completely free. It gives you alerts. The most recent alert was Netflix last Sunday, and that was, look, it was an RSI 30 trigger on a fantastic company. Regardless of how you think about whatever is going on, it was an opportunity. Historically, RSI weekly 30 triggers on Netflix, since they have become a industry leader and above IPO, have been fantastic times to DCA into them. We'll run that sim here. Just call it $10,000 and $1,000 annual contribution. Go see why I have these sliders in there. It is explained. Okay, there's more how Tom works. It's all on this site, guys. But just running that sim right there, guys, it's a fantastic time to be getting into these companies. All right, yeah, maybe Netflix wasn't on your radar until 2022. Even so, come on, guys, these are fantastic opportunities. So that was the last alert sent out. When you sign up, you will get alerts when these things trigger. If we get a nasty move in the market here this week, I expect some other things to fire. So alerts will be going out. And look, this is not investment advice. This is me presenting data for you to go and make your own educated decisions with, okay? We can't argue the data. This is a fantastic time to be DCAing into the best companies in the world. Not this is. RSI 30 triggers, right? And you can do it just by investing in the indexes alone, or you can name pick, which I do have a curated list that I'm continuing to add to here of companies that I do view meet the criteria of best companies in the world. All right, so fantastic free tool for you there. I just wanted to touch on briefly, but look, guys, to round this thing up, again, I would encourage you not to speak in absolutes and not to get too jumpy early in the week. Let's let things happen, confirm, and then deploy our risk in a more probable environment. Guys, stay safe, manage your risks, go make some money. Let's see if we can finally break out of this range and confirm one way or the other. That would be fantastic to get into a trending follow-through environment where we print. I'll see you soon.